Alright guys, give me just a second. Not going to do the whole waiting lobby music thing again. Going to dive right in. Let me throw the link over here in the chat. Put this here. Still need to go do a recap of the alert trade so that y'all have that too, but let me make sure I put this in the right place. Let's see. Put it over here. Somebody over in Bullish Raid talking about buying the dip too. We'll talk here in a second about why that may not be a good idea on some tickers. You put this here. Sharing in one or two more places real quick so that these people have it, and then we'll jump in. Oh my goodness, I put A end of week. Let's see. Alright. Let's take a look at Tesla to get things started. Because I know one of the guys over on one of the groups was asking me about that and talking about the analysis being spot on. Drop this here. Alright. Deal with that here in a little bit. Gonna take a look at the charts real quick. So, Tesla, what we got going with Tesla? We have big fat red candles on lots of stuff today. We talked about the risk and everything with tariffs and the inflation data, multiple other factors. So, want to tread lightly. Still going to advocate for people not swinging calls or puts on most big tech. The risk to reward is just not worth it right now. But Apple, of all things, tried to hold up a little bit. Let me jump over here. Let's start with NVDA and work our way through the drivers for big tech at the moment. But we'll come back to Tesla because I'm giving one of the guys time to jump in. That was involved. So, let's see. On NVIDIA, what we got going on? So NVIDIA actually rejected, if you look at this downtrend here, coincidentally, NVIDIA happened to reject at that downtrend. Now let me remove some of these price target levels I had for a previous trade I was in. That way it's not so busy in the range when we're looking at it. But looking at NVIDIA, what we got going on, if you look at the weekly, this tells a very interesting story for NVIDIA, especially since everyone has got the anticipation for earnings next week for NVIDIA. So maybe we get a bounce for NVIDIA into earnings, but this is also why I kind of tread cautiously approaching earnings, because there's no guarantee, which seems to be a common misconception, that something's going to pump into earnings, especially NVIDIA, because if you look back historically, that's not the case, right? So, sorry, checking that real quick. There we go. Overall, what happened with NVIDIA is trying to maintain this uptrend. We got the nice bounce here previously, but then we are pushing up and volume is tapering, price action, right? Same thing over here, price action, there was a slight taper. We tried to get a little bit more volume going on into Friday last week. But the interesting thing you see here is with this rejection now, price action is actually increasing with our volume on the sales side. So right now on NVIDIA and several other things, I know that, you know, some of the guys in Discord are talking about buying the dip. Even as a longer term investor on NVIDIA and Tesla and several others, this is a dangerous spot to try to buy a dip without waiting to see, for one, is there going to be confirmation of a bounce? Definitely will continue to advocate people stay out of calls and put swing stuff. Just the risk to reward is not worth it on a lot of the tickers right now. But ultimately, NVIDIA right here, if we do catch a rejection, we could see a move down towards the bottom of the existing channel. So watch out on NVIDIA, because technically that is a lower high and we're respecting this downtrend at the moment. So we could technically, depending on how things go, form a new low. Also, if we're being proper from a technical standpoint, we broke this uptrend, right? So that's very rough drawn, but you get the idea. So definitely want to trade cautiously here with NVIDIA, because this could be a sign of a reversal. Weekly candle is looking very much red at the moment. Let's jump back over to Apple and work our way down the big tech ticker list. So of all things in here, so y'all understand what this was, it was an intraday head and shoulder setup, and I traded puts off the setup. I'm going to delete it now since we've already played out the setup to show you this, because this was the key level I was watching for. So right here, I removed that. That 246.89 was a key resistance level that I wanted to see whether or not we could push above it or not. And it looks like with everything flowing and pumping and looking great, we might have a potential bet. Where is it at? Here, let's look on the 4 hours so you can see it better. So we had a bull flag going on here that was looking really good, right? The problem that I had with that bull flag was the dissipation of the volume on that flag as we headed into the level that we needed more volume. It caught volume, but then it failed to actually pierce the supply zone with that volume today. So that's a bit concerning. Definitely want to be careful on this and see what happens. But if you look over here, Apple's still respecting the same levels that we've been in previously, but this is also the same level we rejected off hard with earnings. So what I want to see on Apple next week is if we can hold the support, if we can retake that level and push higher, that's great. It needs to stabilize and hold that range. Again, not going to trading kind of fresh swing or anything like that on that setup, just because risk to reward's not worth it. Let's see. Jump past Adobe. Amazon. So what's up on Amazon? Amazon actually broke this trend off earnings, or heading into earnings, right? Which we had played the upside move, and that measured move played out. So I'll go ahead and finally delete this so that it's not muddying up the chart so much. And I probably should clean up a little bit more of these support and resistance levels, the minor ones, so that we can see things a bit clearer. What happened on Amazon? So it retraced. I thought it was going to backtest and maybe hold that support zone. It's still trying really hard to stay above that 214 level, but we have to see next week what plays out on Amazon, because right now it's trying to backtest that supply zone as demand zone now. Market structure is still intact with the overall uptrend on it, but this is definitely a very cautious area for it, because it actually broke the support that it was holding here previously today and closed below it. And not only that, with the selling, notice how we have strong increasing selling volume with the selling. Buyer or seller exhaustion has not occurred there. So same thing we've been talking about on several others. AMD price action. Remember on the video yesterday, we were looking at AMD, and with the price action moving up on AMD, volume was dissipating. And then here we are today as buyer exhaustion occurred and the sell-off began, a very big drop on AMD, which actually now puts it back in the same potential drop setup that it had before in the same descending channel, right? So downtrend still intact on AMD. I'm not going long on it yet as much as I really want to. I've told you all that many times over the months, but I'm going to wait for confirmation of reversal before I do that. Google. So Google is playing this downside breakdown here. This is one of the very few stocks that I swung a cheaper put on, and I already had secured the gains because I traded quick and got out. Some people are probably still in them, I guess, maybe if they left a runner or two. But let's see. Let me check something real quick. So if anybody stayed in those, they're up 90% now. It was a 321, 175. So broke trend of the rising wedge, right? And then we're now playing out the downtrend. This also caught some news today with a new thing over in Europe, and that's what I've always warned about with Google is all it takes is one single news article and this thing takes a deep dive. Case in point today where we had this nice big fat red candle with the broader markets. Microsoft, I know some of the guys on the Discord traded some calls for a quick scalp right there and made great gains. But this is a bearish engulfing candle, and we're still in the same broader consolidation phase here on the weekly. So that's not looking so hot. I've been watching Microsoft again, not trading calls or puts on Microsoft in the range because this thing could go either direction, but also not loving how close we're getting to potentially breaking that trend line. If we break that trend line with strong volume, it's not going to be so good. So watching that to see what happens in the coming weeks. I have some Microsoft shares in some of my investment portfolio accounts, so I need to hedge those accordingly if we do break that level, especially if we test that 404 level again and we break that, hedging it. So let's see. Meta finally cracked 700. So Meta completed this upside measured move target a few weeks ago. I haven't been tracking it super closely since then. Just was waiting it out to see if it ended up cracking below 700 again. But the key level that you want to watch in here, I'll delete that so it's not in the way. But it filled the gap here and then rejected and dropped lower. So Meta was on an insane green streak, and then it looks like it's finally catching a bit of a retracement. So wouldn't be shocked to see this thing pull back to 636 level and retest that zone. First, though, it needs to crack below this range right here at 683 or 676. I apologize. We'll see what it does on that back test there. NVDA, we already looked at a few minutes ago. Not looking great. Definitely glad I sold covered calls on NVIDIA. I need to check on what the status of those are. SMCI, yet again, rejected that key level. Had a super hard pump off of the hopes that they actually meet the deadline next week on the 28th. So we'll see how that happens. I'm not trading calls or puts on something like that, though. SMH still maintaining the same head and shoulder structure. If we never break high again, then we can push and maybe fill that gap up at 270. But semiconductors and all the tariff talk is just not going to work out well hand in hand. So definitely want to be careful there. Stevie, I got you tagged for Walmart, DraftKings, RGTI, BPAI. We'll talk through those here in a second. I got you covered. Tesla, we started to talk about it, I think, but I'm not sure that we fully talked about it, so I'm going to dive in again. So there's actually head and shoulders here on the weekly now. Not super obvious there. You can probably see it a little bit cleaner on the daily, but left shoulder, head, right shoulder, neckline, and we're potentially playing that out, but we did reject to the downside here. And I know there's lots of lines, but that's because we're trading several different positions on this right now. Downside gap, it tagged that 324.68 level and pre-market back whenever we tagged this move before, but it was just shy of that gap fill level during active trading hours. So wouldn't be surprised to see us actually test and tap that 324.68 next week to fill the gap during trading hours. Analysis that I provided previously on this still remains true at this point. You now also have a bear flag in play here, in case that's not obvious. Technically, it could have been a bearish pennant from this level if you want to look at it like that, but I'm going to draw this so that you have it for reference. Ooh, that did not grab where I wanted to grab. But that was a bearish pennant. We broke to the downside, so we'll see now if this bear flag actually breaks here, because if it does, I would venture to guess I'm going to be even more conservative and do it over here. Measured moves 21%, give or take. I wonder if the 21% of this breakdown would put it right around... How about that? 21% for that bear flag breakdown would be exactly where the gap fill at 255 is. So, not saying we immediately go there by any means, but calling that out because y'all need to be aware of both directions on the setup. I'm still in my Tesla shares, but I sold covered calls against my shares, so I'm not taking any real losses right now because I'm hedged accordingly. Let me see what's going on over here in the chat. Agony's asking about investing versus trading. So yeah, let me circle back with you on investing versus trading. Like longer term investing, retirement accounts, especially with shares, all for that. I think that buying dips and dollar cost averaging can work well if that's the intent. Normally, my approach to that is on even in that situation, if I'm doing that in a position, I typically am looking for signs of a bounce and a reversal. There's no point in me buying, for instance, if I was like AMD's an easy example just because it keeps on tanking. But why would I want to buy AMD on a dip at 125 or even here at 114 when it's potentially about to tag 94? If you look across 100 shares, I could do the math over on the side, but for the sake of time, I'm not. You're talking about a considerable number of shares difference for your money that you could purchase with that amount of money, right? If you're talking about that big of a move. So that's why just continually buying like that on something that's in a range like this, if you're a trader and an investor, it's kind of wacky and doesn't make sense. If you're just a flat out standard investor, you have recurring investments taking place for a given ticker or ETF or indice, then that's a bit different, right? But typically the people that are looking and doing like that with retirement accounts aren't also actively trading. Some are, some aren't, but if you're actively trading and you see the setups like this are in play to where we could see more downside, why not wait until you get a confirmed reversal before you actually make the purchase? On midterm, then buy it up, right? So like that's a bit different. Palantir might be in that situation right now if I go look. So Palantir on this situation, like it's holding above that key $100 range that I wanted to see it hold. That is a bearish engulfing daily candle. So definitely want to trade cautiously. I want to add to more long-term swing calls on Palantir, but I'm waiting till next week to see what happens. Mia asked how I try to go online daily, maybe once every few days. If work is super busy, then I might actually only get on like once a week, but definitely feel free to follow here or jump in the free Discords. There's a link in the chat or in the description if you want to click it and join that too, or any of the Facebook groups I'm in. I'm happy to help, but my approach on trading and investing is maintain an unbiased approach to it and look at things from a either direction that this setup could play, right? Because it's very easy to look at the charts from only a bullish mindset, and y'all have seen how bullish I can be because I'm bullish at heart. GameStop and AMC got me into stock trading back in 2020 and 2021. I was only in retirement accounts and crypto before that. So at heart, I'm a bull. I want everything to be bullish, but I'm not going to ignore the downside setups that are in play here because that's how people get burned, and that's how most retail traders end up blowing up their accounts. It's just not a safe way to trade. So switching up a little bit because I want to make sure that I cover at least the key tickers for everybody. I'm going to look at QQQ, SPY, IWM real quick, then we're going to start slamming through some of these others that we have going on over in the request list so that I cover everybody's basis on their stock request. So QQQ right here, that is a very big red candle. So we could see a bounce and a retracement like what we saw previously, but there's a little bit more that needs to be taken into account right now on QQQ and SPY. What we have now potentially formed on QQQ and SPY here on the weekly is a double top scenario. And I'm not saying that we reverse by any means because the market structure is still intact here of an uptrend. That being said, that is not something you want to ignore in this situation, especially with the rising tensions with all the political climate and everything else. It'd be kind of silly to totally ignore that. So watching to see if we break to the downside here, because if we do, and I apologize for all the lines, we've been trading multiple time frames. So I'll remove some of this to make it a little bit cleaner. because these minor levels we can add back in if we end up trading something on it. But ultimately, what you've got here on the weekly is a potential pullback range that honestly it's much needed. We've been pumping hard for the last over a year, right? So retracements like we saw last August, that's healthy and good. By no means am I saying that we're full-blown going bear market, because we're not there yet. But definitely want to trade cautiously here, because it's not like we dropped today and then caught a wick. We dropped today and we kept on dropping. And we have strong selling volume that was increasing with that. So definitely want to trade carefully here on tech. SPY, same thing, since you got Apple, Microsoft, and NVDA that are basically driving most of the movement right now. What's really concerning is SPY and QQQ dove as hard as they did, even with Apple trying to maintain flat today. So if for whatever reason next week Apple's news doesn't keep it afloat and it loses its support range and broader tech pulls back more, QQQ and SPY can dive really hard and it can get really nasty really quick. So going to... We looked at SPY. So SPY, it's probably going to backtest the support range here. Let me remove a few of these as well, just because I know it's busy. I need to go back and remove these minor support and resistance levels more often. But also noticing here that SPY actually broke this uptrend it was in. I didn't even take time today because I was trading so many different things and working and everything else. Didn't notice that earlier, but that's actually not so bueno. Now that I see that too. So not only did SPY catch a double top on the weekly along with QQQ, it broke this short-term uptrend it's been in. So just watch this to see if we form another high or low here. Yeah, we'll see next week. And like I always say, I want to wait for confirmation on any kind of big moves like that, because we could bounce and then retrace, but what you want to be careful of on that is if we bounce, retrace, and then move lower, because that certainly can happen, and we've seen it happen before. Especially if you're an options trader, you want to be careful with that. IWM rejected at the larger trend again. So look at this. And again, sorry for all the lines. I got people trading like smaller time frames and larger time frames, so I'm trying to be respectful of all levels. So IWM is actually rejecting at this downtrend line again here. What you want to see on IWM is going to hold above this previous low. If it now forms a lower high, like it did actually, and if we form a lower low following this, then this is going to be the trend that is the prevailing trend, and this thing's going to keep rolling down. So definitely be careful on IWM. SPX, you don't even want to look at that chart because there's so much going on with that, because we've been scalping the crap out of SPX. But I really need to go clean up some of those. Today was one of those days that, like a few Fridays ago, had I bought a lotto put and degened a little bit, like a $6,100 put at open, then it literally would have been one of those go $300 to $10,000 top trades. But I didn't trade anything on SPX. I traded some futures over on Top Step and made another Combine account, hit its limit for the day, so I had to lay off that one and switch back to options. But let's see, tickers on the request queue here. So Walmart, I'm going to look at that because I feel like that's on 2 or 3 of y'all's. So Walmart, Tony's been heavy on Walmart lately, so definitely want to touch on it. So Walmart's been maintaining this strong uptrend, right? It had some selling off and retracement off of earnings, it looks like. It's trying to backtest this demand zone here. So we'd like to see this uptrend stay intact. Even if it breaks below that trend line itself, like it did today, it caught itself. We're looking for the supply and demand zones to hold. Previously, this was a supply zone. Now it's a demand zone. So we'll see if we catch a bounce there. But that's hellacious selling volume. Maybe some of that's coming off the earnings. But keep an eye on Walmart next week to see if it drops lower. If it loses this 93 support especially, it's moving to 89. And then potentially going to head towards the 84, 85 gap fill. That's what's up on Walmart. I'll post like the detailed breakdown on that later. DraftKings, I trimmed off the last of my runners on DraftKings earlier today, just because it was rejecting off that level, which I know most of us had already taken gains on DraftKings previously. when it came off earnings and set our stop losses. But yeah, DraftKings you want to watch here for a potential pullback because it's also looking at a double top on the weekly, and that's a very big candle to offset. But watching that to see because it filled that gap and it kept on diving. So that's where DraftKings is at. Let's start. Get some water, and then we're gonna jump into RGTI. All right, RGTI. So RGTI is still trying to maintain this pennant. We don't know which direction this pennant's going to break, up or down. It's got a bullish pennant if you look at a larger time frame, but technically this is a could go either way pennant is what you got going on here. So the same analysis I've been posting for RGTI is still in play here. If NVIDIA does dive more, it's probably going to take some of the AI and quantum tech. Here, I'll show you. It's probably going to take a lot of these with it. So with the exception of BTC, which is actually China-based, which is why, of all things today, that one was green versus others. Same reason that BABA opened up green, right? And then sold off. So just touching on that, that's what RGTI is at right now. BBAI, I started phasing into some longer-term calls on this because I saw it held the support range and I saw some flows that made sense to risk it. I don't love this bearish engulfing candle. I called that out earlier today, but it tried to hold the support. I saw some flows that made sense on it, combined with this tapering selling volume looking like seller exhaustion starting to occur. So if we do break this support range next week, like I said, I'm lightly phasing into some longer term swing calls. My feelings won't be hurt at all if it goes and tests 463. I know Stevie's probably freaking out hearing that, but I'd be okay with that. There's also a gap right here that has yet to be filled, so it could potentially go back and fill that gap. My approach on something like this, for one, the options are significantly cheaper than big tech, so like I'm okay with the risk to reward ratio on it, combined with phasing in and taking a light phased entry approach to where I can add in a little bit if we break to the next support level. Alternatively, if we hold, bounce here and move, then I can take gains and trim my position accordingly. Big Bear Bay, that's that one. Grab Tony's list here. Coming back with the Twillo. Alright. Twillo filled the gap, Tony. Is where Twillo is at. And it completed that upside move and then some that we're targeting. So watching that. Deleting this since it's not valid. It's back testing this previous supply zone as demand zone now. So see what it does there. Same thing kind of as what we looked at a second ago. See how volume taper is occurring here. And that's, I mean, it's a good example to show the big difference between the selling here that has been very intense, but then is kind of tapering off. Whereas when you look at something like NVIDIA or AMD, it's an alternative situation to where volume's actually increasing. So that's something to note, even though it's super simple and basic, just something to call out there. Twillo. So yeah, that's what I would watch on Twillo. I'll remind me and I'll pull the chart so that you have those updated levels or you can screenshot them, whatever you need to do. Affirm. So Affirm taking a nice big dive right here. I really want to add to some longer term calls on this thing just because it's maintaining this inverse head and shoulder setup on a larger time frame. But I want to wait and see once we have reversal. Same thing I mentioned earlier for AMD and multiple others, that not good to go ahead and add into something until we get reversal. I'll be looking to see if it fills that gap and catches a bounce, but as of right now, it looks like it's taking a rejection off that level. Let's see. Hood. So Hood's actually selling off pretty hard too with increasing volume. So I think most of y'all have hopefully already secured gains on a lot of your positions on the Hood calls that y'all were in, as well as even potentially taking gains on your runners at this point. I think I still have some runners of like the April calls. I probably should lock gains on those early next week just to protect it, but yeah, Hood played out our measured move to the upside and then some, so I was definitely happy with that. It's getting a much needed breather and selling off at this point, so definitely be cautious there. Okta. So Okta's another one where the calls ripped and most of us sold into gains earlier on it. Looks like it's selling off now, going to back test this support zone. We'll see if it can hold a bounce there. This is another example from a basic technical standpoint. You have selling and you have increasing volume with the selling, so watch out for this to dive more. Not recommending trading puts or anything like that unless that's your thing, you go for it. But I won't be alerting on something like that just because there's too many support levels in the range. But it broke trend and technically has increasing selling volume, so definitely could break either direction. Here, if it doesn't bounce, it also looks like it formed a head and shoulders there on the 4 hour. And if y'all want to see what I'm talking about, I grabbed the wrong spot. We're going to do it anyways from the spot, and we'll adjust it accordingly if we need to. I hate drawing in pre-market and after hours. Let me go on daily and do it. My mouse is not playing kind with me. Here we go. That didn't draw where I wanted to catch. But you get the point, right? So we can come in and tweak it now. We got it closer. I don't like using after hours and pre-market though, so we're going to go back here. But that is a head and shoulders that is intact that the neckline broke on. The measured move on that though would only be like 5%. I mean, it's almost completed that measured move. It might go a little bit lower normally with measured moves, so I'm targeting whatever the next support level is in that zone. So look for a 91.50 tap, I guess, on Octa if you want to. I'll leave that head and shoulders so we have it on the other chart patterns. Let me go back to the list. Man, I saw Tomorrow Coin's screenshot, and I thought that dude literally just took a screenshot of his whole portfolio, like, here, do TA on all these. Shop real quick. Yes, the shop's looking filthy as well, right? So shop took a nice big dive. Huge dive, actually. Both of those ranges. So it looks like shop might actually head towards that gap fill because it's now potentially going to test this trend line right here. But if it loses that 115 level, I mean, that one, I'd have to look at the options to see if it makes sense, but that might actually be one that makes sense to trade puts on a break between that $10 movement range if it gets confirmation, because that's increasing selling volume. Got 3 red candles in a row right there. That's not looking so hot, so it looks like shop's going to get a strong pullback if it loses that support level. Oh man, Stevie did it again. She threw a big list of these tickers in there. Let me check in there. I'm gonna look at the ones on live stream. So Oxy, hopefully a lot of y'all trimmed calls on this thing when it popped off big yesterday, but Oxy's looking for a back test here. I was debating entering some fresh calls on it earlier today, but I wanted to wait and see if it catches a strong bounce first, because there is inverse head and shoulders in play here, and I think it wants to move towards that gap fill level, but I want to wait and see if I can get a better buy-in on it. So that's what I'm waiting for on Oxy. Let me check the chat real quick on YouTube before I go through these other ones. Max asked for my opinion on T-Doc. So I did TA on T-Doc a few days ago. I have not looked back to see how that TA has played out, but I mean, Teledoc looks like it's back testing this range at this point. I can go mark more levels for you in this range. You'll remind me, I'll try to do it Monday morning, but there's a minor support there, it looks like. So if it does break this range, it might move to 985. I know a lot of people are flocking towards T-Doc right now, but definitely keep an eye on this. If it can hold that support range and move higher, you can look at that TA I posted the other day, because maybe it's retracing here for a back test and a bounce, because the volume is dissipating a little bit with the selling, so that's a good sign that, you know, sellers are kind of exhausting a little bit. And again, there's a whole lot more that I could dive into on the technicals for all this stuff. Just FYI for anyone watching, I'm trying to keep it from the basic standpoint as we're going through it, because these basics matter. And then from the basics, you can actually go into more of like a detailed usage of all the indicators and whatnot. If you want to look at EMAs and SMAs and some of the other indicators I use, you could do that as well. But for the point of these videos and walking through this, trying to keep it simple, focused on basic technical analysis with supply, demand, support, resistance levels, as well as your technical patterns and trend lines that are in play. Because even though people get really fancy with lots of stuff or focus a lot on MACD and time to, sorry, long day, TTM squeeze indicator and other things like that, you don't have to get that complicated. You can use those things for additional validation, but the most basic standpoint of technical analysis, you can actually get a lot out of it. So, T-Doc we looked at. So, I see Mia. I apologize if I'm saying your name wrong. I don't use VWAP a lot, Nick. I did back in 2020, 21, thinking that I needed to. And that's one of those things that I stopped looking at nearly as much, honestly. I know that there's a lot of YouTubers out there that use a lot of that stuff and they push it, but there's a lot of those overall indicators that just don't make sense to apply across the board. So yeah, on Thinkorswim too. I use Thinkorswim as well. The feed, if you look on the channel throughout the day, I actually have a Thinkorswim buy sell script that runs all day. It's got some different tickers on it, and I'm always happy to alternate those if y'all need those swapped or something. But it looks at several things behind the scenes, Bollinger Bands, moving averages, and multiple other things that I've coded into the script. But it can be referenced, and you can use that if you want to reference it. But sorry, trying to jump back over here and make sure I'm covering the list of tickers that people are wanting. Yeah, I see there's quite a few of y'all in here at the moment, so if y'all want, feel free to like and subscribe, share on your socials, all that good stuff. I know there's people from multiple Discords I'm in up in here, and I'm always a big fan of learning from as many different places as you can. So you'll never hear me like pushing people to only be in ethical trading Discord or that kind of nonsense. I'm good friends with several other Discord owners, and we're all in each other's Discords because we're all about community and growing together. So that is what I'm all about. Hymns at the request of Stevie, because we're looking at this morning. So Hymns had a huge run, right? And then it looks like it's getting its retracement on finally, which is much needed. I'm not actively trading this. I know quite a few of y'all are right now. But watching Hymns here to see there's a gap to the upside there. There's a gap to the downside. It probably fills that gap to the downside. It's still overall a bullish continuation market structure, although that's some heavy selling. But that's kind of to be expected. I don't know, that's a bad volume candle. We'll see what happens with earnings, whether that serves as a positive catalyst or a negative catalyst. I can tell you that based off the movement across this range on this chart and knowing the volatility, this would have been a fantastic candidate to sell premiums on, because the premiums are through the freaking roof due to the volatility, but also heading into earnings next week. You could probably, if you were in shares, for instance, and you sold covered calls, you probably could net a huge gain off IV Crush, unless for whatever reason with earnings this thing decides to rip, 100 plus. I don't know enough about their business fundamentals behind the scenes to actually make a assumption at this point, but just calling it out. Reddit. So Reddit's actually backtesting this demand zone, so looking good right now. It has some pretty heavy selling volume, so not loving that. We'll see if it catches a bounce or not, and go from there. And Nick said ethical or nothing. No, dude, come on. Which, by the way, me and him were chatting on Facebook. I think it was last night or the day before, and he was like, yeah, I watched that ethical guy's live stream. I was like, who? Which was kind of funny, because me and him had chatted quite a bit. We're both moderators on one of the Facebook groups, so I had to let him know that I am ethical, and now he knows. And now you've been called out on the YouTube stream. Let's see. Bank of America. So Bank of America backtested that level, which was a previous gap fill, and this is why, if y'all are wondering when y'all see me clicking this, so you can see in the description I used dotted purple as not filled gaps on the daily candles, and then once a gap is filled, because I drew that whenever we had this gap up right. I was trying to zoom in with that. Don't know why I did that. Now it's gonna freak out and load because it's trying to zoom, but see if we can get to not panic and go back. Nope, it's panicking. think I broke it. We'll jump right back to it. No, that's definitely not the Bank of America that we were trying to look at. I can't type, guys. So, what I was trying to show y'all before I so rudely broke it was this gap right here on the daily. Whenever it closed here, it gapped up overnight. This is a gap that you can see on the daily chart. So when that happens, I mark that gap level from the previous close with a dotted purple line, because gaps tend to get filled. Historically, when they get filled is kind of the question in play, but gaps tend to get filled. So from a technical teaching standpoint, this is actually a good one. I'm glad we clicked on this because it gapped up here, it moved up higher, it retraced, and see how it bounced at the gap fill level before moving higher. Gap fill levels right there, that's when I would have marked that as filled and changed it to solid purple. And then the reason I leave those there is because historically those end up being supply and demand areas where you've got support and resistance. So you can see here that we're now testing that level again. We'll see whether or not next week it breaks to the downside here and moves lower like it did there, or if it catches a bounce and moves higher. Not looking so hot because that is increasing volume with the selling momentum in the price action. So Bank of America might dive a little bit next week. I know nothing about this ticker, Stevie. I'll tell you what, this one off chart, remind me, throw it in the chart analysis section and I'll actually draw that one out from scratch. Dude, I'm not famous, Nick. Get out of here with all that. By any means. There's like 3 YouTube subscribers on this channel. Nobody knows any ethical stuff. Sorry, trying to check 2 other Discords real quick to make sure I'm not skipping somebody's stuff, but then I gotta wrap it up here in a minute and go rescue my wife from our 4 kids. Let's see. We covered that. And if there's any other tickers y'all specifically want me to check real quick, throw them in the chat and I'll check those too. But hey, you get me there, Nick. At the end of the day, I don't even care if I'm famous or not. My goal is to help as many people as I can to not get burned, because some of y'all have seen my kind of history of trading, but 2020, 2021, 2022 was a really interesting learning experience for me in the stock market. Let's just say that. So yeah, jumping over to crypto here real quick. I'm not freaked out at all about the pullback to down crypto. I know people are freaking out because the exchange, I don't know if y'all saw it, crypto exchange news. What was it, Bitfinex crypto? Yeah, it's Bybit. So telling all y'all that are on this right now, this is why you don't leave your crypto on hot exchange wallets. Not your keys, not your crypto. It is as simple as that. So I haven't even read into all of what happened with Bybit, but apparently they got hacked and all the people that had money on there got stolen. So that's why you don't, like, crypto's not the problem. The problem is you wouldn't leave your wallet or random money just sitting out in the open where people could grab it, right? So you would hope people are not malicious, but we know how the world is, unfortunately. So if you're going to use crypto, if you're going to buy crypto, especially if you're going to invest in holding crypto, get a hardware wallet like a Ledger Nano or a Tether or any of the following. I've had Ledgers for years. They're my go-to. But buy your crypto on a hot exchange and transfer it immediately to a cold storage wallet. That's a safe way. Huge fan of crypto. You want to see my inner bullish bias come out? Talk about crypto. So Bitcoin, bullish bias aside, like as soon as this thing actually does, y'all see my analysis. If I see that we're actually going to break the support levels that matter, like the 87 to 90k range on a weekly candle, I'll be concerned then and maybe hedge a little bit heavier. As of right now, I'm not concerned. Crypto, even when the broader market pulls back like this, typically bounces back quicker than everything else, especially right now with lots of positive catalysts upcoming in the future. The short-term news of this crypto exchange, Bybit getting hacked, it's going to be a blip on the radar. So lots of good opportunity to buy more crypto on projects. Doge looks like it wants to dive. Solana's trying to hold support range. Bitcoin dominance is still creeping up. Alt season has not occurred yet. So if any of y'all are into crypto and have heard all the nonsense that alt season came and passed, it has not occurred yet. It will occur once we see this kind of nosedive happen on Bitcoin dominance, which we have not seen. So still watching this at the moment. Bitcoin dominance is retaining, and the setup is still intact. So other tickers we need to check real quick. Dang, somebody made bank off those Apple puts I learned today. I won't swing puts, but I trade puts off that head and shoulders pattern. It was too easy to not pass up. So I trade those first ones, the 240s those 245s, and then also jumped into a 250 off that harder rejection up at the top, which was a very easy, clean setup. So head and shoulders there. I know I deleted it earlier, so sorry if you're just not joining. You can see it at the beginning of the video, but broke the neckline, dove hard. I sold off over here because I was on a meeting, but definitely kept on dropping. So that's why it's important to not only look at one side, because what happens in situations like this, whenever you only have a bullish mindset when you're looking at charts, is you stay in calls as they go up, and then you watch so many people that stay in those calls even when it pulls back a little bit, because they're like, it's going to move higher. So especially on something like today, it moved up like this, it pulled back here. People either bought more to average down, or they potentially are like, oh, it's going to go back up again, so I'm going to stay in my calls. And then this kind of stuff occurs because people ignore both patterns and setups, right? So what ends up happening when you look across a larger time frame, for instance, the daily or weekly on a lot of these stocks, like if we look at NVDA or Tesla, NVIDIA was a really good example, is you see big pumps like the last few days this week, and it's real interesting to look at on the options flow to see over on unusual wells, because you can see, for instance, today, calls being sold by the big boys into that spike, and then they either bought to close them on the pullback, or they're going to let them expire worthless, or they're going to let them get theta decayed and hammered on the premium. So when I see over on my flow streams, I've got multiple screeners set up. When I see the wells and the larger players starting to sell call options, which you can see because people are buying it at the ask, that's really clear indication that, okay, we're at a resistance level. I'm seeing these come through the flow. We're probably going to see a reversal. And sure enough, more often than not, we see a reversal when that occurs. Same thing whenever you're in a very hard dip, you're down low, you're at a support zone. If I see puts being sold to open by big players, it's usually indication that they're expecting a bounce off that key support level, and they're selling the premiums with the expectation that they can buy to close them later for cheaper or let them expire worthless. So that's where using the options flows can be really valuable. And you have to be able to look at the flows and really identify whether or not something is actually bullish or bearish in nature, or if it's part of a multi-leg strategy. Because if not, if you're just looking at the open interest for a given strike, that's not really indicative of anything whatsoever. Ooh, yeah, James, good call out for Applied Digital. Let me look at that real quick for us. But yeah, what I was going to show y'all here is, like, for instance, Wednesday, saw lots of calls being sold to open here, and sure enough, we pulled back. Same thing here, calls sold to open, and even with the pullback and the open here, those calls never hit the same highs because the Greeks hammered them. So then people get stuck in calls here, and maybe they sold right at open. If they got in low enough yesterday, they might have secured some gains. But NVIDIA options are expensive, so why risk something in a setup like that where you know that the big players are selling the premiums to the retail masses? So that's part of the reason why I don't trade stuff like that as a buyer side right now. It just doesn't make sense for me. But Applied is one that actually today ripped it open. Our calls that we ran went nuts. Why am I calls on Applied Digital? So multiple reasons. For one, though, this larger time frame, head and shoulders, inverse head and shoulders, I should say, setup that we have been monitoring and trading against. So we saw the back test of the bounce, entered calls with the back test of the bounce, and then today, nice big rip at open. Also break out of this downtrend here with strong volume. So again, like I've been talking about, volume was chill, volume's increasing and rolling up as the buying price action is occurring. So if you take anything from this video whatsoever, just remember, look at the volume profile in correlation to price action, because that alone can be very, very telling. So going to keep watching this. I'm still in some runner calls on it. I did take some gains because we perfectly tagged that resistance level, but going to see what happens from this range on Applied Digital. Trying to think if there's any other tickers on. I'm going to wrap up here in just a second. My bad, Stevie. I was wondering. I thought it was Please and not PLS ticker, but that was an interesting ticker to look at. So my brain sees some tickers and candles everywhere I look nowadays, which is interesting. James, I will not tell people when to buy or sell things because that could be considered illegal. That being said, Applied Digital, I'm still bullish on it here. So I'm staying in some calls. I'm probably going to be entering some new calls on Applied Digital next week if we get a pullback. Also in some shares on it. So yeah, I'm watching the setup here to see if the bullish continuation carries on, and then I'll go from there. You can see though that like the dramatic difference for one in the chart setup on something like this compared to looking at big tech and how it looks like we're hitting a double top. There's a lot of other tickers that, for one, premiums are a whole lot cheaper and offer a lot better risk to reward ratio for gains. Lots of the tickers that I trade options on, I can get the options for under $100 per contract, even sometimes $100 to $300 a contract if it's something different that I'm wanting to trade. But most options contracts I trade, now I'm kind of curious. Now I want to see what my average is. Let's see if I can do this real quick. I've got my list thing over here. Where's the average formula in Google Sheets? I know where it is in others. Equals, is it equal average in here too? Okay, cool. Sorry, still getting used to Google Sheets. I'm curious to see this real quick. Then I got a bell. I know y'all can't see this. I'm doing it over on the other PC. Oh, I can't do it there. Crap. Well, I tried. Usually I have to ask ChatGPT to check that for me, but I can tell you with like a lot of confidence that my average contract price of options I trade is easily under $200 looking across these. I mean, most of my screeners are configured to monitor like 0.20, which is $20 in options premiums, right, to $3 for certain types of accounts I'm trading, and then $1 to $6 in other types of accounts I'm trading, being $100 to $600 per contract. And then I've got another screener also that I use for some larger contracts on one of my other accounts that might be $500 to $2,500 per contract, and those are more typically your larger leap calls on certain types of things that I'm more investing in. So all that being said, the reason I mentioned that is you don't have to trade $300 to $500 contracts on only big tech tickers that are a few weeks out or even a few months out that are way the hell out of the money, and risk your money on stuff like today happening, right? So lots of other good tickers out there you can trade and make significant gains, because even though I'm trading tickers and option contracts are that cheap, and one I'm looking at for Palantir was a good example where bought it for $277. That thing hit $3,600. Alibaba, another one, bought that thing for $234. That freaking call contract hit $4,500 today. Wow, that was 1,851% gains. I knew it went high and I knew it to update the sheet, but I didn't realize that was the percentage difference. I'm not saying by any means that all trades I do go that big, because anybody that's been trading with me for a while will tell you I'm a big fan of setting a stop loss on anything once it's up 5% or more, because you're not going to go broke by taking profits. It's better for you learning to take gains at 5 to 10% gains consistently, grow your account, protect your capital, than hold something in hopes of always going to 1,000% gains. But looking through a lot of the trades I take, for one, I'm risking very little capital. on the trades. I mean, hell, those Apple puts I traded today, while I won't advocate for someone to swing Apple right now because risk to reward doesn't make sense, those contracts for Apple were $9 each. Okay, so I risked a Starbucks drink worth a contract is how I looked at that, and that was a clean head and shoulder setup. And yes, those only went to $29, but that's also 222% gains. So shift your mindset, start looking at stuff in percentage gains instead of dollar gains only. Most of the time, if people are purely looking at dollar gains, they're playing the masses, and you don't want to do that. Look at it as percentage gains. That way, if you're trading on a tiny account or a large account, it's easy to consistently look at the same type of thing. Because otherwise, if you have a $30 gain on one account and a $30 gain on another, it may be 1% on the big account, but that $30 could be 100% gain for your account on your small account. So it's really important to look at it from a percentage standpoint. It'll keep you clean. Hey, 5 to 10% max, like for real. I don't know if you've ever looked at like a compounded consistent gains like model, and I've got one in the Excel tracker that y'all can grab on the Discord for free if y'all want. But compounding like 10% gains, if you can do that daily or weekly, that is huge gains over a 6-month period. Like huge, ridiculous gains over a 6-month period. My brain is too shot this week to run that through in my head and figure out what that actually ends up being. But on that note, I appreciate everybody for hanging in. Please do like, subscribe, share if you found this valuable or helpful. Share the feedback with me. Always looking to learn and improve and convey stuff in a way that helps more people. So on that note, everyone have a fantastic weekend, blessed evening, spend time with your family, friends, and loved ones, and we will be back at it next week.